Good morning, everybody. Welcome to the Flow Show. Here we are, election day. Finally, we got there. Glad we got there. We're in the eye of the storm now, boys and girls. All the talking is done. It's all down to people putting bits of paper into metal boxes, and we find out what the outcome is. Hopefully, sometime this week, if not in the next 6 months. So we're looking forward to that. I hope you're all ready for it. I'm not. I don't want it. I don't like it. But we've got to go through it. So here we are anyway. Right, let's get stuck into things while I'm tinkering around with my screen in the meanwhile. Let's go. Before we start off, last chance. Well, I say last chance, but this is a chance you don't want to miss, getting into our chat room. Becoming part of the ForexAnalytix crew and squad and all our roommates, getting analysis from the platform, and obviously being in a chat room throughout this election. I don't think Blake's going to get much sleep tonight, so he's going to be very, very active in our chat room. So if you want the super nuts rundown of what's going on in the election, then it will cost you $1 if you're not here already. Could be the most important buck you spend this year. So take advantage of that. Go to the ForexAnalytix website and you can sign up today just for $1. Right, let's go through all the headlines and then we'll get stuck into the election stuff. Going to start with some of the data coming out so far. It's services PMI day for a few countries, and we're getting all the bits and pieces dropping. Firstly, over in China, we got well, we'll start in Australia, actually. We'll start in Australia with their services number 51, so a decent beat there on expectations. And last month, China as well, doing well, 52, much better than the 50.5 expected. Services, though, have been in expansion, so it's a little bit more of a gain. There haven't been too many worries there so far, if you can trust the data, of course. We also had a few bits and pieces out from the Eurozone. French industrial production, a little bit soft, down 0.9%. Spanish unemployment change, also a little bit softer there, a little bit worse, 26.8k. UK services PMI, the final number, improvement of 2 pips over the flash number 52 on that one. And that's it from the data front. A bit quiet on that front at the moment. The RBNZ issued its semi-annual financial stability report, and although it is tilted for financial stability, there was a pretty bearish comment in there, which Governor Orr repeated later on. The report said that households have reduced their discretionary spending and businesses have put investment plans on hold, while business confidence is recovering as inflation and interest rates fall. Significant further weakening of the economy remains a risk. So a little bit bearish, as I said there, for the Kiwi economy by the RBNZ there. There was also a comment from Orr moaning about the lag of policy changes and when they're seen in the economy. So he was a bit worried about that, what they call the transmission of policy, i.e. what they do now doesn't or may not come through to the economy for a while later. He indicated, sometimes that can be up to 2 years, which can be read in 2 ways. One, that if they're cutting rates now, but they don't see the effects for a long time, that may urge them to be a bit more cautious on further cutting. They don't want to overdo it and find they have to go the other way 6 months down the line. So one could take that as a bit of a less dovish slant. But then on the other hand, if they're not seeing any meaningful impact quickly, it may indicate that perhaps they're not doing enough to see a quick reaction and see certain things like financial conditions changing rapidly. So that may get them to be a bit more dovish and keep going on their cut path, just so they do stoke a bit of a reaction in the economy. But that's the rock and hard place for many a central bank. So you can take that comment from either way. The RBA, they left their rate unchanged at 4.35% as expected. In the statement, they said core inflation remains elevated and service inflation is only going to decline gradually. So the labour market is still tight and the demand for labour remains strong. They did lower their forecasts for consumption, GDP and CPI and core inflation, though they did revise up their employment growth forecasts. They also raised their outlook for China based on all the kitchen sink throwing that the Chinese have been doing over there. RBA Governor Bullock said that they believe rates need to stay restrictive for the time being. Still thinks there are risks, upside risks for inflation, but that they have the right settings at the moment. And if the economy turns down more than expected, they will be ready to act. So I was looking for maybe a bit more of a push away from the hike rhetoric that they've had earlier on this year. They've already moved away from that somewhat in the last meeting, and there's no real big mention about hikes are being considered. They are still, nothing's off the table in terms of that, but we're just slowly edging away further from the hawkish side towards the dovish side, but there's still one of the main holdouts on not cutting just yet. There were some expectations building for perhaps a February cut, some even looking at a cut towards the end of the year, but as I've been saying, I think those are well out of sync with where the RBA are now, and that's I would like nothing better for them to cut tomorrow, because I'm short Aussie dollar still, but you've got to be objective, and I don't see them cutting until the new year personally. And when we get to that point, it just depends whether the data is still coming down slowly and gradually, or whether it's picking up a bit of speed. I suspect it could pick up a bit of speed, much like everywhere else. They're going to catch the same cold eventually, but we shall see. Looking back at some of the US data from yesterday, again, not an awful lot out. We got factory orders, which came in, well, depending on your calendar, as sucky as expected, or a bit suckier than expected, down 0.5%. I know other calendars had it expected at down 0.5%. So on and around expectations there. Strip out the transport stuff and they rose 0.1%. We also got durables revisions, and they got marked up a little bit. Durable goods orders, that was down 0.8% previously, came in down 0.7%, so a little bit of an improvement there. But again, take out the big transport stuff, and it rose 0.5% from a prior 0.4%. One of the main numbers to look at is the capital goods orders, non-defense ex air. That improved to 0.7% from 0.5%. So everything tickety-boo on that side of things. In oil markets, we had OPEC General Secretary out book talking, saying the world economy is doing well. They have global growth at 2.9%. They say we are very positive on demand, both in the short and long term. This is while we are very positive on demand, there are some challenges, but the picture is not always as negative as some make it sound. It said peak demand is not going to happen as the world keeps growing. As I said, a bit of book talk in there. It's never very bad over with that lot. They are expected, though, to pass on their output rises in December and possibly punt it into the new year. Politicians are getting busy about the Fed. Powell's arch nemesis, Elizabeth Warren, has wrote a letter basically telling the Fed to cut by 50 basis points this week. Her and some of her cronies have signed off that letter. These two, Warren absolutely hates Powell. is never afraid to say so as well, but she's pushing for a 50 pip cut, which is very unlikely to happen this week. The Harris campaign says we may not know election results for several days. That's going to be one of the worst outcomes from this, in how quickly we get the results. Their campaign research expects most Wisconsin results by Wednesday morning, but others may be come a little bit later than that. So we're going to be doing this, I think, for a few days at least. There was someone in our chat room posted one result that's already come in. There was a vote of 6 people in some little old town or something. So 6 people got to vote. The results are in. It's 3 apiece. So not telling us anything on that one. There's another tropical storm building around the Gulf of Mexico, and it's looking like it might turn into a hurricane. It looks like it's going to be hitting the Cayman Islands and Cuba first off before advancing further north into the Gulf. Expectations are that it may impact about 1.7 million barrels of oil per day in output. If that does turn into something worse and continue on north, so something else building there. Right, that's around all I've got on the headline front at the moment. I'm just going to go and search for Gregor because he's coming in as well. So give me 1 minute. There he is. And promote to panelist. Right, so Gregor will be coming in shortly. So obviously with the election today, really we're all said and done. If you haven't caught up in all the analysis yet, then you know, this is the last moment to do so. What I'm going to do personally is just concentrate on a few assets that are mostly going to be impacted by the election. But the first thing I want to draw your attention to. Morning, Gregor. You getting okay?
Morning. Yeah, everything is fine here.
Good stuff, mate. I will seek your wisdom in a bit. Just want to get through a couple of bits with the viewers. So the first thing I want to draw your attention to is the vols. Okay, now you can catch this on our website, as you can see here on our market dashboard, market info. You've got all the bias chart. You've got the orders and options that I put up every day, and then we've got this option widget. Now, this is very important because I've been speaking about option vols. Just gives you an indication of, you know, how currencies pairs may move. Anything above 7% is getting into higher volatility. Okay, so dollar yen's been running at between 11 and 13, 14%. That's why you get fairly big swings at the moment. When something happens, it's a 50 pip move before you can blink an eye. What's most important right now is the overnight vols, as you can see here. Okay, these are getting into some big old numbers now. And you can click on here and have a look. So forget about all the complications, the deltas and all that sort of stuff. Look at the current level, where it is now. Look where it was a week ago. Look where it was a month ago. Okay, these overnight vols. This is where we're at now. We have seen a huge jump in volatility for overnight because it now contains the US election. My old pal, Michael Brown, Dollar Mex. Look at that, where we are now. Okay, this is an all-time high for overnight volatility. Okay, implied volatility on the options. Okay, so that shows you what we're getting into now. We are getting into bonkers territory. Okay, so this means we are at risk from wild swings. You've got to be careful, as Marcus mentioned yesterday here in the Zoom chat. Watch your spreads later on, because if things do start getting wild, when those results start dropping, your spreads are going to go wide, and it's going to be very difficult to trade getting in prices, let alone picking which way the market's going. So we're seeing a lot of this big pickup in this volatility, as you can see down here. Okay, dollar yen, even though it's all been running on the 1 month really hot, look at where it is a week ago, a month ago, look where it is now. Okay, so be prepared for this volatility. Your account protection is your number one priority at the moment. If you do want a few thoughts, and I'll pick those up right now, just quickly. Let me go and drag it out of the Twitter ether. This is the trade-off that I did with Mr. Michael Brown. Where am I going? Over here this week. That's out. It's also got a bit of advice on how to trade through the election. So I'll pop that in the Zoom chat if you want to have a look at that. And as I say, this is your last chance. If you don't know what you're doing or don't know the risks around this event probably by the start of the US session, then you might want to think about staying out of these markets for a while. Okay. You don't want to be going into this without knowing what you're up against. Okay. Right. So, Gregor, I'm going to bring you in first, mate. Get you in. What do you got for us? You've picked anything particularly relevant to the election today? Hello. Paige and Gregor. Hello.
Yeah, sorry, I was just speaking to myself.
Was muted. The only one who listened, wasn't it? Yourself.
I will just look at dollar, some major pairs, and also will cover gold with Chinese yuan.
Yeah, go ahead, mate.
Yeah.
Let me hand you the screen 1 second.
Yeah.
There you go. All yours, mate.
Okay. Okay. Here I'm looking at dollar. It's more like a dollar index basket. It's more equal weighted. So what I want to show you here is that despite this, some serious recovery that has been in place for the last few weeks, if this is really all about the elections and potential speculations that Trump could win this battle, then of course, once the elections are behind, we will see potential again that flows will change, because if flows are building based on this event, then obviously we can expect that at some point flows will change when the event is over. Of course, we are not in that period yet, but let's say in a few weeks when dust will settle, I still think that dollar could find some serious resistance. But for now, I'm seeing a bit of more upside potential on the dollar and more downside coming on a lot of majors as well. So these pullbacks that we have recently seen, I'm seeing as a potential opportunity actually to catch some upward momentum on dollar index that is still incomplete. So why I think that this short-term strength is incomplete here on the dollar is because I'm looking here at the triangle. Okay, so that's an ABCDE pattern, and each leg within a triangle should then be made by 3 waves. And you can see that this is shown and evident also here, where the basic structure shows that each leg should be made by 3 waves. So even if that's just temporary recovery, there's still room for more upside, and maybe we will see a retest of this trend line connected from September of 2021. So whenever dust will settle, when elections will be behind, that's when I would expect again dollar to turn to the downside. And just earlier I found this chart. It's from Oanda. They shared one article back, and I think that's pretty interesting chart. You can see that always when Republican won this battle and elections, the US dollar firstly rallied and then reversed to the downside. Okay, so even with Trump from a few years back, it was a very similar situation. So I'm also expecting that if Trump would win this battle, that again we could see some very similar pattern. And if we consider that after all we have seen some very nice recovery under Biden, then of course I would not be surprised if we see another new cycle here to the downside. And this goes perfectly and very nicely with this Elliott wave pattern. But as I said, for time being, now it's still some few weeks left for this dollar recovery to resume. So if you're more like a trader, then on an intraday basis, or maybe just won't hold trades for more than a few months and just rather focusing on trades that will last only a few weeks, then of course there are opportunities still on the long side of the dollar, because as I said, this rally is incomplete. So here I'm looking at the euro. I see some very nice resistance here at 109 up to 109.50. So this whole area can be quite attractive, interesting for potential sell here. Of course, we have also Fed rates decision this week. If maybe they will not be that dovish, then maybe dollar could see some very nice push to the upside, especially versus euro. We know that ECB it's leaning to much more dovish policy compared to Fed. And also, let's not forget that we still have this open gap here around 108.30. So these gaps from Sunday gaps, of course, are normally will get filled for the week, usually within the first 24 hours. But of course, that's not the case here because market just goes a little bit more sideways because none wants to take a big risk here till elections results are start coming out. But I still think that during the volatile week that we could fill this gap around to 108.30. So I certainly think that the resistance levels will be quite strong here. Looking at cable, I see some very nice resistance at 1.3050 area. We had a few spikes up here. We know that the Bank of England will most likely be looking for cuts. They will express dovish views. I think that inflation, Ryan will know this better than me, came out more than expected, if I'm not mistaken. So obviously this is something that is keeping cable under pressure. And if we see some solid bounce here back to 1.3050, maybe slightly higher, I think that that's still could provide some nice opportunity on the downside, because this was a pretty strong sell-off here from September highs, and now I just think that we are just pausing around here before we see another drop. Now Aussie today, we can see that Aussie is coming higher. Of course, RBI is on hold. They expressed concern that inflation maybe is not done deal yet, and even Hang Seng Index is turning slightly to the upside. So I think that Aussie is maybe the one that could do quite well compared to, let's say, euro or pound. So if I would be looking for dollar longs, I would most likely be away from Aussie dollar, okay? Because Aussie, in my opinion, because of these reasons from the RBI, could see higher prices. But if we see some retracement and rise into this 6-7 area, then I still think that this could be quite attractive region for potential more weakness, because clearly that's an impulse, and now we are just trading and consolidating here. Maybe this consolidation could be something similar like we have seen here, but in the opposite side, obviously. So that was an impulse. You have seen a three-wave setback and then another push higher. And now we turned bearish with an impulse. So I'm expecting a rally and then another push to the downside. Looking at the dollar yen, everyone is watching this pair, and I see a lot of yen crosses coming nicely higher into some very important levels, but I still think that the 155 maybe is the level that we should watch for. We have seen a pretty nice and strong sell-off from that point. Not really sure what was the case, but most likely Bank of Japan hiked rates back then. And of course, this now should be a very important level as well if we retrace all the way back to 155. And I think that this could provide some serious and interesting resistance. So for now, still think that there is chance for more upside here in the short term. We have some gap still open around to 153, 10 pips lower maybe. So even if short term, mid term, I just think that this recovery is still ongoing. If I would be looking for potential shorts on this pair, then what I really would need to see is a very sharp reversal from, let me change the color here, from that resistance area. And then I would be looking to sell rallies. I firstly want to see that the resistance that I'm identifying will actually will actually hold here and will cause a reversal. I don't want to be too aggressive and jump in front of the train here, because I realize that this trend is actually very, very strong. So for me, it's important to see the reversal first before trying to define the risk here and look for potential shorts. Now, I also mentioned to look at metals. So metals, I think that they are in a very late stages. We see that a lot of media, everyone, retail traders, everyone are turning aggressively bullish on metals. So regarding the sentiment, I just think that we are in a very, very late stages of this recovery. Not to mention silver, when we know what everyone was looking for when we started breaking here around 32 levels, around 34, 35, and now look where we are trading. So obviously the sentiment was just too aggressive, too bullish up there, and that's why we are seeing the opposite reaction from the market. And when looking at the wave structure, I see some very nice completed 5 waves up here within this channel. So even if there would be just small pullbacks and temporary and not a deep one, which by the way, I will expect a higher degree wave 4 here. But even if that's not the case just yet, I still think that there is chance that we will break slightly beneath 2700 before we potentially trying to stabilize, let's say around 2690, which was the previous swing high here. And the reason why I think that there can be some more weakness in the short term is also dollar Chinese yuan. Now, if you look here very closely, you can see that markets where Chinese yuan and gold, as you know, are trading mostly in quite tight positive correlation, but that was not the case since mid of October. They lost some correlation, and this normally occurs at the important highs or lows. So this kind of a divergence can tell us that maybe higher degree trends are really coming to an end. And if you look and trying to also to do the analysis here, you can see that potentially we have some head and shoulders bottom formation in the making here. So with dollar Chinese yuan trying maybe to look for another push higher, let's say 7.2 is upside potential for me here, then I would assume that gold will stay in a pullback here, maybe even just sideways, who knows, but definitely that's not the kind of a pattern or intermarket analysis that would convince me to buy gold. Okay, so I'm just rather aware of much deeper pullbacks here. So I think that gold, if we look maybe on here on some short-term levels that I will watch, maybe here, I'm seeing 2762 as a very interesting resistance. If we'll see some volatile moves here in the next few sessions, I think any kind of a spike here short-term into that area could be just temporary, and I would be looking for more weakness, and I'm even prepared maybe to look for some shorts while the market is trading below 790. Now finally, dollar Mexican peso. This one will obviously be a mover, especially if Trump would win these elections. So we are coming out of this triangle and we have this gap unfilled from Sunday. So I think that if we see some dip down to 19.80 this or 78 or so, I think that this could be quite attractive area, potential supports to join this trend here. But of course we have to be aware of these volatile moves here. So definitely we have to keep an eye on these events and risk. Okay, so if anyone has any questions, please let me know. This is what I had on my list for today. So Ryan.
Thank you, mate. Thank you very much. And yeah, if you do have any questions for Gregor, anything to do with waves or how he looks at markets, then please pop them into the chat there and he'll answer them. He'll stay with us for the rest of the show. I will grab the screen back from you, mate. That's okay. Can you see my screen okay?
Yes, all is fine.
Yep, cool. Thank you very much. Okay, so I'm going to look at a couple of things that Greg has looked at, but just give a different view. What I suggest a lot of you traders do, if you're trading some of these pairs that are at risk pairs, we're talking the Canadian dollar, Mexican peso, Chinese yuan, and the likes, is switch over to some of your wider charts, okay, your longer time frame charts like this one. I'm looking at a weekly chart here, because what it does, it gives you a very broad picture. It tells you what may happen on some of these levels. For example, we've got this 140 level, okay, you know, look how long we've messed around it. Look what's happened when we've tried it and failed there. We get some decent pullbacks. Look at this one here, 140, and it's gone all the way down to the 90s. We also relatively haven't stayed above that 140 area for very long, apart from obviously this period here where we stayed above for quite some time. But even in these moves, they have been pretty fleeting when looking at a long term. So you can see we've been in this range for a long while now, okay, and it's going to take something special to move it out of it. Now, the elections are big deals, okay, but it's politics, okay. After the dust has settled, you have to fall back on what the economies of any particular country is doing. And if you're taking it from the US side, is the US in bad shape? No. It's got decent growth. Is the Fed cutting rates? Yes, and they're cutting slowly. So that isn't going to change 10 minutes after the election, okay, no matter who wins, okay. What policies come afterwards, yeah, that can affect things, but in the short term, we will go back to trading what's been important, okay, at day to day. So for things like dollar CAD, we've been in an uptrend. We're up here against this 140 level. Can we break it? Of course we can, okay, but can we hold a break above it? What's going to cause that? Is it going to be today? Is it going to be a flash move like this where we get a bit of a run through, a bit of a spike up, and then you know, a couple of months later or a year later we're back below again? Okay, so you need to keep an eye on these big strong levels because they can extend moves as well. So if we get a break of 140, then it could push on, and we could push on up towards this double top in the 146. Absolutely. Okay, so look at what it means for the longer term picture, and that's what I'm doing a lot today. Dollar MEX is another one on the weekly. Very interesting picture on this one, and I've posted this in the chat room. We've got some big old levels coming up. The 50 retracement here, 50 fib 21. Okay, a big level. It's a level all on its own, even without the fib. You can see there we've had resistance and support against it going back quite some way. So this is a big level up here. All right, if we get up there over the election and we hold it, then that's going to be a big move in itself, because it means if we get a solid hold here, it's going to be another one like this, and that's going to be worth plenty of pips to be had. Okay, there's a decent support area down here against the 200 weekly moving average. Okay, it's been holding the price for several weeks down here. Yes, it's close to the big figure. Okay, so there's probably a little bit of influence with that as well. But if you get a dip from that and you want to look for somewhere to lean against to reduce your risk, have a low risk trade, these are the sort of levels you want to be getting into. See these weekly candles, they're fairly big. There's not a lot in there from a long-term perspective to pick a level. But we can't get down through this 19, okay? And we couldn't get through that since August. So it was a big level on the way up, and it's been a big level when we've come back down to it. So these are the sort of levels you want to pick. You don't have to faff around in here. You can sit at 21 or you can sit down at 19. And if the market gets there, then maybe you assess it and you have a trade. But these big levels show you that if they start breaking, something is particularly changing, okay? Or if they hold, then that keeps the trades in play. For this one, because we know there's been a lot of carry stuff going on here, this 21 level is probably a huge line in the sand for anyone who's still in the carry trade from around these levels. And I don't suspect there's too many, because if you've been short here, you've been taking a lot of profit down here, and you're probably putting your stops down well into positive territory down here somewhere. But there may still be a few holdouts up here in this area probably from 2022s up to 21s will be a bit of a line in the sand for any last carry holders there. So that's going to be a big old level as well. Dollar China, this one is still very messy for me. Let's see if I've got a bit of a cleaner chart. Not really. It's still very messy for me. China's a bit of a mess, but I think given how things are going at the moment, I'm more inclined to buy a dip given this move down here. But this is very dollar orientated at the moment. But obviously it's going to be effective. If Trump comes in, then we could see this rallying right back up to 720s. If we get back up to these sort of areas, I think this is maybe a stretch too far for officials over there. So any rally up there, we might start hearing them coming out and saying, you know, don't expect this to be a one-way move, that sort of thing. And if that's the case, then I'm going to be thinking about getting in some shorts on these top levels. For the downside, we had a brief move under 7. If we get down there again and we hold it, then I might think about the long side. But again, I'm not interested in getting stuck around right in close to market at the moment. I've got my levels either side well away from the intraday noise that we're going to get throughout this. And again, you know, Gregor was talking about gold. You know, everyone's looking at gold. You know, it's been very, very bullish, as you can see. Okay, at some point, it's going to have probably a steeper reversal. Is that going to be now? Who knows? What you have to remember, again, the election will pass by pretty quickly. Probably in 2 weeks down the line, it'll all be in the rearview mirror. Okay, what's been the reason why gold's been bought up all through the last year, nearly 2 years? Okay, it's not Trump, it's not Harris, it's central banks, it's demand, it's the fundamentals have been behind gold. So take the election noise away, we will go back to the fundamentals. Okay, so if we haven't dipped too far in gold, then it's still got all the characteristics of this bullish run, and that means that bullish run has a good chance of continuing. Okay, but then you need to trust your levels and look at your levels. We know what they are in the short term. If we come through Trump and we tested and can't get through this 27, 50, 60 area, then technically it's going to solidify this as a resistance point. Maybe we run through there and we test this level towards 28, and if we hold it, fine. It's saying election's done, we're going back to trading this normally, and we can't get through 28. So for now, we're not going to go any higher than that. And then you go back to trading this normally. So watch what happens through the election. If you're positioned in this, make sure you're protected. But after the election, we're going to switch back to the reasons why assets, pairs, commodities have been moving for longer than the election noise. Okay, so we've got this short-term volatility injection coming up over the next few days. Okay, it's easy to get caught up in that. It's easy to get tossed around in that. But you can always revert back to the fundamentals because they are longer lasting in the longer term. Ali, you're doing a sensible thing. You're short dollar in cable, so you're long cable, long euro dollar, and long dollar Swiss. You're in some profit, so you've got a bit of margin. That's good. You're going to take 50% off and get all your trades to break even on your stops. Very, very sensible, mate. That's what you should be doing. That's what most people should be doing. Okay, yeah, you can let the rest gamble. You know, the other 50% you're locked in, so you're not going to lose any money. Touch wood, as long as there's no big gap moves below your stop. But yeah, and if you get a move your way, fine, stick 100 pip, take profit in. Why not? Let it run, see what you get. You know that you're not going to lose money. So that's exactly the way you should be trading it. If you are in trades, if you're in dollar trades coming into the US session or later on this afternoon, when things really start moving in terms of votes and results and everything, if you're in trades that are close to the market, you need to have a serious think about what you're going to do with those trades. You know, do you want to be sitting 5 pips on side, offside in a trade ready for a big headline that's going to swing you 100 pips? Okay, protect yourself is the utmost thing I can say about that. Greg, I'm going to bring you back quickly. How do you approach these big events? Do you go into sort of the defensive mode, or you're happy to trade away? He's talking to himself again. Gregor. No, where's he gone? Okay, I'm just talking to myself instead then. If you're there, Gregor, give me a little tinkle if you're still there. Andrea, she says she's in close mode only. Yeah, exactly. My position as well. So what else do you need to watch today? Yields. You need to have charts open with yields, okay? Because really what the bond market thinks about the election is going to drive everything else, okay? This is, yields are, they're a volatility indicator. They gauge investor appetite for what's going on in a country. If investors think that there's problems, the new president's going to be a problem for the economy, it's going to want a premium to lend that country its money, okay? So that's why you get yields rising, because bonds are getting sold off, but there's a premium being built in. We've seen it in the UK with gilt yields rising because the UK budget suggested that they're going to raise a ton of taxes for very little growth. So the market's saying, well, why should I invest in the UK? Why should I lend you money when you're not going to give me a big return because growth is going to suck, okay? Because if growth is going to suck, interest rates are going to be lowered. So therefore, you know, why am I going to do that? Lend you money when you're not going to produce the decent returns. And that's why you get a premium happening in yield. So yields are going to be very important. I'm going to be looking at 2 years and 10 years. Okay, 10 years is always your go-to yield market. Okay, to look at, just to give you an idea what's going on. But 2 years are important in the context of what's happening with the Fed. Okay, because the Fed are expected to cut 25 pips this week. Okay, now if yields shoot up over the election, up above 5%, when the Fed's bringing rates down below 5% and heading them towards 3%, that's going to show a bit of disparity. Okay, so for me, that presents an opportunity. Get away from the noise. The Fed's going to keep cutting. It's obviously not linear what yields do compared to Fed rates, but by and large, they do. So, as I say, if we get 2-year yields going up towards the high 4s, 4.9s, 4.8s, even 5%, that's going to be a disparity against where the Fed are going. And for me, that's a trading opportunity. Okay, so watch what yields are doing. 10 years is a bit different. Obviously, it's longer term. So where rates are potentially going to be in 10 years' time is going to have nothing to do per se with what happens in the election over the next year or two. Okay, so it's a bit different, but still rates getting up to some of these highs when inflation was high and interest rates were getting hiked up is going to look very tempting for a trade to buy bonds to see the yields coming back down again. So there's plenty of opportunities to look at in various assets. But if you want to be watching what's happening through this election and getting guides as to what the market's doing, then you need to be watching yields today. Watch your vols, watch your yields, and let them guide you through the rest of it. Ali, what are you talking about now, mate? Aussie fundamentals. Why you don't understand why big investors still think Aussie downside because of China? I think Aussie's still remaining high, so let's have a look. I'm going to look at Aussie Kiwi at the moment because I'm still short that, and I may be looking to add back into that position. So Aussie's obviously had that uplift. There's 2 reasons for that. Obviously, the RBA not doing anything on rates and not indicating they're going to do anything soon. So that's, as I said, washed out some of those expectations for any cuts end of this year, February, whatever, next year. We've also had that bearish chatter from the RBNZ that they're fearing, you know, possible problems in the economy. That's bearish for the economy. That's potentially dovish, meaning they're going to continue to keep cutting rates, maybe at the same pace they have been, which was last time a 50. So, you know, this is Aussie Kiwis, your pure rate divergence trade. Okay, yes, it does get affected by China purely by weight. It's going to affect Australia more than it's going to affect New Zealand. But then the RBA have just up their forecast for China based on the stimulus measures. So they're thinking that these stimulus measures are going to produce the growth, and that's going to be good for Australia, which it may well be. We have to wait and see. So that's why the Aussie is remaining pretty supported against here. We haven't come down too far from these highs up near 111. Certainly not got back anywhere near towards the magnet. Aussie dollar as well. We can look at the same thing. You know, yes, we've had a little bit of a move up, but you know, we're not even getting close to the 38.2 fib on this one. Okay, so we're not anywhere, not doing much at all in this one. I seem to have lost quite a few of me tech lines in here at the moment. Let's come down a bit. Oh, I've lost a lot of my lines. Anyway, this 60-20 is a bit of a level, as you can see there. I'll have to chuck a line in, I think. But that's where we found support on the way down, and that's where we're banging our head on the way back up. But again, this could all change in an instant over the election. If it's Trump and we get a dollar bid, we could be down through the lows and heading lower. So, yeah, look at what the Aussie's doing now, and look at what you know, the election that's going to be coming up over there as well. And after the US election, go back to the fundamentals in terms of what other currencies are doing. If you get something that's untoward, let's say we get some real US dollar weakness and Aussie dollars shooting up to 68, 69s, okay, that's going to put it at odds with what's going on in the US economy. That's going to put it at odds with what's going on in the Australian economy, with inflation coming down and them at some point looking to cut. So those are the excessive moves you want to be looking for trading this. Main king, copper. Yeah, if you watch the trade-off with Michael, it was actually one of my pieces. And let's go and look at this one, because this is a trade art. This is a chart I'm basing it off at the moment. So it's a little bit skewed between some of the levels, depending on some of the contracts. So this is continuing higher. Obviously, some of that China data is helping this along as well. I was looking potentially for a dip below, back down maybe to support down here, because it's bouncing off this 50 quite nicely. But I did say that if we do get a break of this 40-43 area, then it could mean it's powering on, and it's looking like it's breaking at the moment. So if you get a retest and hold here in copper, then you know it's got every chance of them pushing up through these highs here, 47s, and then moving on much higher. So if you're, I don't know what you're doing in that main in copper, but I would be a potential buyer in here, though. It doesn't look like I'm going to get in where I'd like to get in, as is always or as usual the case. I've just mentioned Kiwi as well. Have a look at Kiwi dollar. Again, it's not looking awfully strong. Yes, it's stopped going down. That's always the first step. As I mentioned previously, you know, the first step is breaking what's been going on here. We had a little go at trying that there, but it didn't work out. It's unsure what it wants to do here. Get back above 60s, 0.60s, and maybe things start turning around. But this is really the level up here, 60-30, 60-50. Okay, this zone in here. This is your important area. You need to get back above there to start really turning this around. Otherwise, it still remains weak. So again, what you're going to do if you get a bit of dollar strength on the election and it holds your levels down here, gives you a bit of encouragement to maybe try along off that one there as well. Right. Oh, blimey, it's been a quick show. It's gone on. We've done nearly 40 minutes already, 50 minutes already. So I think we'll call it a day today. Don't forget, come and join us in the chat room if you want. It's an important time for trading. So make sure you surround yourself with people who think they know what they're talking about, and some who actually know what they're talking about. Do trade safe, folks. Join us on Face later, where we'll no doubt be getting the thoughts of Dow and Blake from the US side of things around the election. So have a great day, everybody. Please trade safe. Please trade well. Be good. We'll see you all tomorrow, and we'll see maybe if we're getting some of the results. And thanks, Gregor, if you're still there.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.